Okay, in the comments, I want you to tell me which joke is the funniest, one, two, or three. Joke number one: what do silver investors and teenage boys have in common? A little excitement, and they both started talking about explosions. Okay, joke number two: why did the silver investor get kicked out of the bar? He couldn't stop talking about the size of his stack, and it was making everyone a little uncomfortable. Okay, joke number three: what did the old man say to his wife when the silver price surged 3%? You know that's not the only thing surging this morning. Go to the comments right now and let me know which was the best joke. What is good, Stackers University? It's so good to have you here with me today. Gold and silver are very different metals which are reflected in their price and market movements. It's almost like they're siblings. Even though they have the same parents, their DNA, their genes are unique to each of them. Just as our genes play a major role in shaping everything about us, the gold and silver markets have their own so-called genetic makeup that provides a blueprint for us as investors. The way these genes express themselves are also significantly influenced by experiences and the environment. I think this sibling analogy is a great way to think about the gold and silver markets. And if you're like me and you have an older brother, you know exactly what I'm talking about. My older brother is 7 years older, and while he's always going to be older, for most of my life, my biggest problem was that he was always bigger, stronger, and more developed, which meant most of the time I got beat up while growing up. But right around 17 or so, something magical happened. I not only caught up, I finally was bigger and a lot bigger than him. And while he was a track star, I was a football player that benched 395 pounds and squatted over 500 pounds. So you can imagine, around that time, all of a sudden the bullying stopped happening. I share this because at some point, the silver market will grow and develop into its own market that is very different from gold and could even overtake gold, like gold is now more valuable than platinum. But until then, we have to accept silver's so-called DNA or its genes in terms of how it has historically performed. This means gold is going to dictate the heights silver can reach. Regardless, the good news is silver has one major advantage that gold doesn't. That advantage is silver is a Giffen good. That is why silver always has these incredible moments when the price goes parabolic. I know you're still thinking about Giffen good and what the heck that is. While Giffen goods are usually referred to as consumer staples or goods, by definition, it's a rare economic anomaly that challenges the fundamental laws of demand. It's named after a Scottish economist named Sir Robert Giffen. And the phenomenon is really about when a demand for a product increases as its price increases, contrary to typical consumer behavior. If that is not the perfect explanation of what happens with silver, I don't know what is. Gold doesn't do this. As gold prices increase, we typically see buying slow. Great example of this is what we just saw recently with China. It paused its buying for a few months, and now their prices cooled off a little. Now they're back and buying again. Let's be clear, you are not the Giffen good buyer. Those are the buyers we're waiting on, because that is when silver will have those incredible price surges. Those buyers come into a market because one, they like to wait for price confirmation to determine whether silver is a good investment. While many of us spent the last few years buying silver in the high teens and low 20s, these people won't get interested until silver hits $35 or even $40, which means they'll miss the first 50% in the price movement. This is exactly what happened to many people in 2001 when they were paying $35 or even $38 for silver eagles. The second reason this happens is good old FOMO. They won't believe the bull market is here, and they're going to wait until it reaches a stupid number to jump in. Just like people buying Bitcoin at 100,000, which then causes the third reason, limited supply. As these people will rush in and suppliers can't keep or source product, we'll see not only price increases, we'll also see increases in the premiums. This is why Rickroll reminds us and even urges us to sell during these moments and not simply ride the silver price up, just to ride it right back down.
Remember, too, which we will teach you later in the program, that when the whole world is talking about silver, when you see it on television, when you see it on the cover of magazines, consider selling some of your position. Buying low and selling high requires that you do both.
This Giffen good-like behavior is why silver almost always has these crazy spikes and why I believe $150 silver is now possible. And I'll prove it to you with real numbers. We all know that metal markets changed in 1971 because of the end of the Bretton Woods system and the gold standard. But what did silver do? From 1971 to 74, silver prices rose steadily from around $1.55 to about $4.40 per ounce. From there, we all know about the Hunt brothers and how between 79 and 80, they tried to corner the market and they ran prices up to as a spike of $49 per ounce in January of 1980, only to have that silver price come crashing right back down to around $5 in 1982. Again, This is why you have to sell during these moments of market euphoria. If nothing else, just to cash out, let's say at $45 or even $40 an ounce, and then buy it back at $5 an ounce. Just think about how you could grow your wealth in ounces. Again, we measure our wealth in ounces, not price. For almost 20 years, silver just traded in this narrow range until the early 2000s when it passed $10 in 2006, and then it went on its way up to $48 in April of 2011, thanks in part to the GFC event. Silver then retreated back down to around the $15 or $20 range. As we wait now, we have some incredible potential tailwinds that are in our favor. Increased industrial and investment demand, supply constraints, a small market size, and not to mention the abusive uses of speculation that have kept prices down artificially. Not to mention this Giffen good effect that we just discussed. While we may be frustrated that silver hasn't moved as we would like, silver is simply doing what silver does, as it stores all that energy for the move that's coming. So how can I and we collectively be so confident that silver will reach $150 during this bull market? First, we're going to let data, historic performance, and the GSR drive our logic, and not throw out numbers that are designed to get clicks or convince you to buy metals from their company. First, let's just eliminate the pipe dream arguments that the GSR should be based on in-ground ratio. I can't think of a single item that is based solely on its in-ground ratio. Price is absolutely impacted by utility, so don't expect a 7-to-1 gold to silver ratio, and then don't go back to ancient times and start screaming 12-to-1 or 15-to-1 when that ratio was actually fixed by governments. The fact is that during the 20th century, the average GSR is around 47-to-1, which includes lows of 14-to-1 during the time when the Hunt brothers attempted to corner the market, as well as the 2020 high of 120-to-1. The long-term average GSR is around 60. But for the sake of this video, let's just agree that it is reasonable to consider a range of around 30, 40, let's call it 35-to-1. Take a look at this chart, and I want you to Google it or take a screenshot for later. Just as my big brother set the bar level for me to reach, gold does the same thing for silver. And so that's why we're going to use 4,000 gold as a reasonable top in the market. Now, I want you to go down the chart, and we're going to stop in the 30 to 40-to-1 ratio in the GSR. And that will help us determine what may be a reasonable number to expect for silver. At 40, that makes silver $100 at the 40-to-1 ratio. At a 30-to-1 ratio, that makes silver $133. So going forward, whenever you see those crazy thumbnail projection and they have these ridiculous numbers, I want you to reference this chart or simply break out a calculator to determine how full of crap that particular thumbnail is. The most valuable and important real estate you will ever own in your lifetime is to the left of your right ear and to the right of your left ear. One final word of caution: when it comes to determining these price projections, remember that these decisions to sell or even buy also really depends on the market conditions, and you cannot ignore them. No one can deny that silver is an amazing metal, and its value and utility far exceeds its current price. In fact, I wouldn't be surprised if my daughter sees $1,000 silver. Unless I pull off a Moses and I live to 120 or so, I highly doubt that I'm going to see that. Regardless, this Giffen good effect is one of the advantages that silver has over gold. Silver's behavior and this Giffen good effect, combined with its industrial applications and historical relationship with gold, is why everyone needs a significant allocation to silver. While it's indisputable that gold is the better investment over time, these Giffen good moments that are built into the DNA of silver just may make it a better investment for growing your wealth. Of course, it comes at the expense of being patient over long periods of time and additional price volatility. The better you understand silver's unique characteristics and its historical price patterns, the better you can navigate and capitalize off of its behavior. In my mind, it doesn't matter if you're a long-term holder or an active trader. Silver's Giffen good-like behavior and industrial importance makes it a winner. It's just in its genes. In the comments, what percentage chance do you think silver has to reach $150 per ounce this bull market? How high do you think price will actually spike? Or simply put an A+ in the comments so that everyone knows that you always stack smarter and never stop learning.